Do you know how to get a better deal on your mortgage? With interest rates at record lows and lots of competition between lenders, it's a great time to be negotiating.
In a year alone, I'm going to save hundreds of dollars on my mortgage. And of course, that's going to add up each year. And it could end up being thousands of dollars quite quickly. It took about 2 minutes on the phone. It was a very easy conversation. And the bank was more than happy that I had called. In fact, they thanked me for giving them the opportunity to keep my business.
A simple way to check if you're getting a competitive rate is to see what your lender is offering to new borrowers. A recent report by the Australian Competition and Consumer Commission found the significant majority of interest rates paid on older home loans are higher, and in many cases materially higher, than the average interest rate paid on new loans, which is a trend we've observed since 2015. So if your home loan is more than a couple of years old, there's a good chance you're not getting a great deal. The ACCC found that borrowers with home loans between 3 and 5 years old typically pay 58 basis points above the average rate for new borrowers. It might sound like a small difference, but it's not. On a $250,000 loan, it works out to be an extra $1,400 interest in the first year alone. Over the whole loan, the difference is more than $17,000. Often you don't need to switch, you can just ask your lender for a better rate. But to get the best outcome, it helps if you've done your research.
Because often when you call up and try and negotiate a better deal, they'll say, well, what have you seen elsewhere from the competition? And they sort of use it as a bit of a way to price match. So doing your research online is very important. Having a look at comparison sites or just looking at the major lenders and see what they're offering. What we saw recently was that the online lenders came through and passed on some of the cuts, whereas some of the traditional lenders didn't. So keep your scope wide when you're looking at the competition, and also make sure you're looking at something called the comparison rate, because not all interest rates are the same. And if you look at the comparison rate, that includes not only the interest rate but also other fees and charges. It's really important to psych yourself up to have these sort of conversations. Some people can get a little bit nervous, but I always just think, can I afford not to make the call, because this could potentially save me a lot of money. And so just making sure I'd done my research, I felt really comfortable with what I was going to say, and that I felt sort of prepared to switch banks if I needed to, if I wasn't offered a better deal.
If you're not comfortable asking on the phone, you could try emailing your lender or even using their live chat option if they have one.
Essentially, I just said, look, I've seen that the RBA's cut rates, and I just was hoping that you could offer me a better deal on my current mortgage. And so the woman asked me, what other lenders I'd seen around, and I was able to quote a couple of lenders, including one online lender, and she came back with an offer of 2.87%. So that was down from the current 3% that I was paying. And I just sort of thought, that's pretty good, but why not just be a bit cheeky and ask, could they do any better? She did go away again and came back and offered me a further 10 basis point reduction. So that was 2.77% all up, and I was really happy with that reduction. That seemed quite fair to me. A lot of people have followed this script and called their banks and have had big successes, up to 1% discount. And of course, it all depends on your situation, your relationship with the bank, how big your loan is. There's a whole lot of factors. So if your bank doesn't negotiate with you, there's a couple of options you can take. The first one in this instance is perhaps looking at fixing your rate, because most of the banks have offered better, lower fixed interest rates rather than variable rates. And that's because the funding they get is a bit cheaper. So they're able to offer slightly lower rates on fixed. Fixing your rate means that you're agreeing to a rate for a set period of time. And of course, the downsides might be that in many cases you can't have an offset account. You might not be able to make extra repayments. And if you potentially want to break the contract, there might be some fees. The other option, of course, is to switch. And this is what the Reserve Bank Governor is actually encouraging people to do if their bank or lender doesn't negotiate with them. Switching is now easier than it's ever been before. The banks will actually do most of the paperwork for you. And open banking is this new scheme that's been introduced where your personal information, if you agree to it, can be delivered from one lender to another. And so it makes it quite easy for you as the customer to move banks. Just make sure that you're comfortable with whatever you're agreeing to for your new bank and that it is a direct comparison.
I know it might seem daunting, but it's worth giving it a shot.
The worst that can happen is that your lender potentially says no. And in that case, you can just decide whether you're happy with your existing rate or whether you'd like to look around and potentially switch. So there's absolutely nothing that you lose from doing this. So pick up your phone and call your bank.